Hope for holiday firms as the UK eases travel restrictions, with France coming off the quarantine list from Sunday. Time to taper. Top Fed officials hint that support for the US economy could be wound down sooner than expected. Hello, this is World Business Report. I'm Sally Bundock. You are very welcome. And we begin with a look at the travel industry. It has been welcoming the changes to the UK's COVID travel rules, which come into force on Sunday. So France, a major destination for British tourists, is to be brought into line with other amber list countries. Those coming from France to England, Scotland and Northern Ireland will no longer need to quarantine if they are fully vaccinated. 7 European countries, including Austria and Germany, will join the green list, and India and the United Arab Emirates are among those moving from red to amber. DFDS, which operates ferries between the UK and France, is among the companies welcoming the changes.
And in terms of the Amber Plus rules, we saw an immediate dip down in bookings, future bookings. People were only booking for the next few days, those who really, had to travel. And that was very disappointing because we'd seen a bit of a surge in bookings when travel looked as though it was going to reopen. In terms of demand, we know it's out there because we know how many people visit our website. We know how many people are looking for prices. We expect now that will pick up sharply, that people will have more confidence to be able to book and travel and enjoy their holiday.
Well, Stephanie Boyle is from the flight booking site Skyscanner. You can see her here, in fact, and I asked her if the move would make a real difference to the travel industry.
Yeah, I think so, is the short answer. We saw a 45% jump in traffic to the site immediately following the announcement last night. And we know that that's pretty representative of any time there is an addition to the green list or a change that makes travel a little bit more easy. It is obviously frustrating that it's coming so late in the summer season. However, we've noted that people are pretty spontaneous in their booking. And at the moment in the UK, travelers are looking to book something within the next 27 days. So there may be quite a few people out there who are still looking to understand where they can go, and are obviously quite excited about the fact that France has been taken off the Amber Plus list, which means that they will be able to avoid that quarantine on return. So it is definitely a big step in the right direction.
I think many, though, in the travel industry are disappointed that the testing system hasn't been changed at all or made easier. For example, those who want to go to green list countries, for example, in terms of tests before, when you return to the UK, it's expensive and complicated, isn't it?
That's definitely what we're hearing. When we ask travelers which measures would make them feel more confident about traveling, cheaper and easier testing options tends to come up pretty frequently as one of the first or second options that they think would be the best. It is difficult for people to understand that we're moving into a different way of traveling. We have to acknowledge that that's the reality. However, there are lots of websites out there and there's lots of information for anybody who wants to understand where they can compare prices for testing or perhaps compare different options for testing. So yes, while it's not ideal, I don't think that it's actually a barrier to travel. And I think most people would welcome the opportunity to travel and are happy to get tested if they can then avoid quarantine on return. But yes, that's another reason that more countries moving to the green list would be advantageous for the travel industry as well.
But if you're moving to the green list, you still have to pay for all those tests. And if you're a family of 4 or whatever, that actually could double the cost of your holiday, which I think is a significant barrier. But what are the current trends to travel and tourism in Europe? What are you seeing at Skyscanner at the moment?
We're seeing a lot of people looking at the traditional popular destinations for UK travelers. So very much looking at Spain, looking at Greece, and obviously France. But we're also seeing people looking further afield into October. So while testing is definitely a barrier, it's not putting people off. They're looking to perhaps have a big trip over the course of the next few months, and they're looking even as far as Bali in the United States. So I think that there's a lot of optimism about travel returning and reopening. And as I said, it's not a complete move towards the right direction, but it's definitely heading in the right space. And definitely, I think that what we're seeing is that more people are coming to our site to check for information, to look at whether or not what requirements are in place, what documentation they're going to need. We've got a number of different tools to help people understand that and to look at where they can find that information, including a map which is updated with all of the current restrictions so that people know both what's required of them when they arrive in a destination and what they need to do when they come back. But we're seeing a lot of interest and huge amounts of demand. I mean, everybody has already reported this, but the pent-up demand within the travel industry is enormous. And so people are willing to change their plans if it means that they're going to be able to actually get on a plane and get traveling.
So that's Stephanie Boyle from Skyscanner. And just to say, there is so much information on our website about the restrictions, about the do's and the don'ts, what's needed, etc. So do take a look at that. But now let's move on to the United States, because the central bank there could be set to start removing its support for the economy sooner than expected. In a speech on Wednesday, the Federal Reserve's number 2 in charge, that's Vice Chair Richard Clarida, said interest rates could start rising in 2023. And he was joined by 2 other top officials in signalling that the Fed might soon start winding down the amount of cash it pumps into the bond markets. This hit shares on Wall Street. Samira Hussein in New York was watching for us.
The comments by the Vice Chair of the Federal Reserve that the current pace of the economic recovery could mean interest rates will start going up by 2023 is noteworthy, especially when you couple it with comments made earlier by 2 other central bank policymakers that they would like to see the Federal Reserve start reducing its massive bond buying program. It's a sign that the Fed could be looking at easing its accommodative monetary policy much sooner than it and, frankly, many others had originally thought. Now, of course, all of this depends on incoming economic data in the next few weeks, including labor reports, inflation readings, and, of course, consumer sentiment. And it also really depends on the virus. The Delta variant of COVID-19 is quickly spreading in many parts of the United States, and that could derail the country's current economic recovery.
That's Samira Hussein. From the US now to Australia, where extended COVID lockdowns in Sydney and the surrounding regions are causing immense economic damage. New South Wales state, of which Sydney is the capital city, represents around a third of the nation's economic activity, and experts are predicting a significant hit to Australia's growth in the current quarter. Phil Mercer reports from Sydney.
Cheer is hard to find in Sydney's lockdown, but businesses are doing what they can to keep going. Although the bar at Buckett's Brewery has been forced to close, it's been converted into a temporary COVID-safe drive-through.
Normally we'd have 120 people in here, all drinking pints and having lunch and dinner, and there'd be a line 3 deep at the bar. We might have 5 cars lined up on the street that looks amazing, but that's like 5 people, as opposed to 120 people like going through. So we're down 65% on revenue.
Industrial estates are mostly empty. Many shops are shut and construction suspended. There are disaster support payments for businesses that need all the help they can get.
The key is, and we've been speaking to government about this, the payment has to be very quick. So government has to communicate very strongly with small business. They have to let them know that there is going to be money coming, that it will help them. We've all learnt resilience throughout the last year and a half, but adaptability is crucial too.
Each week, the lockdown in New South Wales is costing the Australian economy up to $600 million. Then there's the impact of coronavirus restrictions in other states. Before the pandemic, this was a country that went 3 decades without a recession. It's now at risk of having 2 in just over a year.
This is what we used to give to our guests.
International border closures are keeping away the tourists who used to rent Francisco Furman's bikes. He's changed his business model to become a repair shop.
COVID is not going anywhere, and I don't think tourism is going to be back this summer. So we're in survival mode. Right now, it is the only thing we can do. This is my business. I want to save this. It's literally my baby.
COVID-19 is again testing the fortitude of the Australian economy, which did fight back from previous blows inflicted by the pandemic. But once more, businesses are having to adapt to survive. Phil Mercer, BBC News, Sydney.
So many challenges ahead still. Well, let's look at financial markets to see how they've gone today in Asia. And as you can see, it was a mixed picture, with Hong Kong losing about 1%, whereas Japan up by 0.5%. In mainland China as well, we saw some losses today. And this is all still because of a real nervousness amongst investors about what new regulations the Chinese authorities may introduce in the future, which could impact technology stocks and other big stocks going forward. So they're really out of favour right now. Europe, the trading day in Europe will start in around about 10 minutes time. You can see how all the main markets across Europe ended the day yesterday. We've mentioned the big story that's really first and foremost for those in financial markets, and that is of course what the Fed will do next. But we've talked about that already. I'll see you soon.